Okay, this is going to be a homework walkthrough for Chapter 3 practice. So we have the Vanille Corporation is a manufacturer that uses job order costing. On January 1st, the company's inventory balances were as follows. They give us raw materials, work in process, finished goods. Um, and this is January 1st, so that tells us that these are all beginning balances, and that will be important later. The company applies overhead costs to jobs on the basis of direct labor hours. For the current year, the company's predetermined overhead rate of $14.25 per direct labor hour was based on a cost formula that estimated 570,000 of total manufacturing overhead for an estimated activity level of 40,000 direct labor hours. The following transactions were recorded for the year. So then they give us transaction information, which we will use to answer the following 15 questions. So question 1, what is the journal entry to record raw materials used in production? So that is in B. A is the purchase, but raw materials used in production was B. So that is going to go into work in process as a debit. And they were all direct, so there is no manufacturing overhead entry. And then they will go out of raw materials as a credit. Question 2, what is the ending balance in raw materials? So if you'll recall up at the top, they gave us beginning balances, so I copied mine here. And they want to know the ending balance in raw materials. So I need the beginning balance to start off with, so raw materials beginning balance. And then transaction A is where I purchased raw materials, so that is a debit to raw materials. And then transaction B is where they got taken out of raw materials and put into work in process. So B was primary. So adding together the debits and subtracting the credits, I get my ending balance. All right. Question 3. Oops. What is the journal entry to record labor costs incurred during the year? So the labor costs were listed in transaction C, and they give us direct labor, indirect labor, and administrative sales and salaries. So direct labor goes into work in process as a debit. Um, indirect labor goes into manufacturing overhead as a debit. And selling and administrative salaries have their own account because they are a period cost where direct and indirect labors are product costs. So that's why they get their own. And then wages payable will be our credit. And that total is just the three of those added together. So that's your journal entry for labor costs. Question 4. What is the total amount of manufacturing overhead applied to production during the year? So if you'll recall up at the top, they gave us the predetermined overhead rate. Whoops. And estimated manufacturing overhead costs of 570 and estimated direct labor hours of 40,000. And then in transaction F, they tell us manufacturing overhead cost was applied to production, which is what we're supposed to be figuring out. The company actually worked 41,000 direct labor hours on all the jobs during the year. So we use this actual hours and we take our predetermined overhead rate that was from our estimates and multiply that by our actual hours. Okay, question 5. What is the total manufacturing cost added to work in process during the year? So 3 things get added to work in process, and that is direct materials, which is from the direct labor, which was given in C. And then the answer to question 4 is the manufacturing overhead applied. So we just add those numbers up, and we have our total manufacturing cost. Question 6. What is the journal entry to record the transfer of completed jobs that is referred to in item G above? So again, remember, anytime things are transferred because they are completed, they go into finished goods. So transaction G gives me 1,645,750 job cost, and they come out of work in process as a credit with the same amount. Question 7. What is the ending balance in work in process? Okay, so again, they gave us beginning balances for everything, so that's going to be important. So work in process, again, 3 things go into work in process: direct materials, direct labor, and manufacturing overhead. So first I need my work in process beginning balance. And then transaction B is where my direct labor is. My direct material, sorry. My direct materials. Transaction C has my direct labor. And then manufacturing overhead was the answer to question 4. And then those are all the debits in work in process. And then the credits are when things go out of work in process and into finished goods. So that was transaction G. So again, work in process is a normal debit balance. So we add up all the debits and subtract the credit, and we get our ending balance. Okay, question 8. What is the total amount of actual manufacturing overhead costs incurred during the year? So I finally figured something out on, anyway, some things. So it's really confusing because, at least in my problem, my actual number is the same as my estimated number from the beginning of the year, and that is just not how it works. But I finally figured out the way to figure out the actual is you need to take indirect materials, which for this problem is 0. And again, so manufacturing overhead, those are all the indirect costs. Okay. So indirect labor was in transaction C. So there's my indirect labor. And then transaction E has other manufacturing overhead costs that they just don't label. So adding up all of my indirect costs will tell me what my actual manufacturing overhead was. And like I said, my answer is exactly what my estimated was from the beginning of the problem, but don't let that confuse you. To figure out actual, you just need to take all of your indirect and manufacturing overhead costs that were incurred to get your actual manufacturing overhead costs. Okay, question 9. Is manufacturing overhead underapplied or overapplied for the year, and by how much? So again, let's see. applied. I think it was question 4, but I'm just going to take my predetermined overhead rate times the actual hours in transaction F to get my applied. The answer to question 8 is my actual. So I subtract to get this number. And for me, I have to look at the numbers. So applied is what I thought was going to happen. Applied is what I put on the books. This is what I thought was going to happen. Actual is what actually happened. So I put onto my books too much. So applied is over or more than actual. So that means it is over applied. If it had been under or less than actual, then it would have been under applied. So I have to just look at what was applied and actual and see which one was less. If applied is more than or over, then it is over applied. Question 10. What is the cost of goods available for sale during the year? So I need to take my beginning finished goods, which was given, right? Cost of goods manufactured was given to me in transaction G. And I add those two together to get the cost of goods available for sale for the year, right? What I started out with and what I manufactured added together equals cost of goods available for sale. Okay, question 11. What is the journal entry to record the cost of goods sold referred to in item H above? So I cut and paste. H, jobs were sold on account to customers during the year for a total of 3,360,000. The jobs cost 1,655,750 to manufacture according to their job cost sheet. So they're being asked to just record the cost of goods sold, not the sales. So I'm just referring to cost of goods sold. So cost of goods sold into as a debit. And it comes, when I sell something, it comes out of finished goods as a credit. Question 12. What is the ending balance of finished goods? A very good question. So remember, they gave me a beginning balance. So finished goods beginning balance. And then the transactions that dealt with finished goods was G, jobs costing 1,645,750 to manufacture were finished. And then H, they were a portion of those were sold. So again, normal debit balance in finished goods, add the debits, subtract the credit to get the balance. Question 13. Assuming that the company closes its underapplied or overapplied overhead to cost of goods sold, what is the adjusted cost of goods sold for the year? So if you'll recall in question 9, I came up with 14,250 overapplied. And the unadjusted cost of goods sold was given to me in H. So remember, this was overapplied, so I put too much on the books. So I will subtract. I'll take the number from H minus the overapplied to get my adjusted cost of goods sold. If this had been underapplied, if I had not put enough on the books or applied enough on the books, then I would have added. But this one I'm overapplied, so I subtract. Okay, question 14. What is the gross margin for the year? So sales was given to us in H, 3,360,000. Cost of goods sold was, we figured that out in question 13. So my gross margin then is sales minus adjusted cost of goods sold. And then question 15, we have what is the net operating income for the year? So we have the gross margin from question 14, selling and administrative salaries from transaction C, and the other various selling and administrative expenses from transaction D. So I will take my gross margin minus my period cost equals my net operating income.